do this show and why I wrote How to Make Money in Any Market. For most of my life, pretty much everybody in America recognized that picking individual stocks was a fantastic way to get rich, as long as you did it right. Not everybody agreed on the right way to do it, but practically everyone accepted that it was certainly worth doing. Then the dot-com bubble burst in year 2000, and picking individual stocks suddenly went out of style, at least for regular people. Suddenly, there was a new conventional wisdom on Wall Street, the conventional wisdom of index fund supremacy. Almost overnight, legions of experts, backed up by an endless parade of non-investing journalists, came out of the woodwork making a pernicious argument that you are either too stupid or too imprudent to manage your own money. They claim that it's more or less impossible to consistently beat the market, so you might just as well park all of your money in an index fund that mirrors one of the major averages, like the S&P 500. The more extreme index fund absolutists like to say that no one can consistently beat the market, and if anyone looks like they can or says they can, it's pure luck. That means picking individual stocks is nothing more than gambling, where you have no edge. So why not settle for an index fund that can consistently give you 8 to 10% annual return? Sure, you won't get rich, but you'll steadily make money over time. I like that. After the dot-com bust and then the financial crisis, that argument became pretty darn compelling. This is the ideology, though, that is absolutist, and for that, I think it's wrong. I've been fighting it since Mad Money first went on the air. Why? Because as I explained in How to Make Money in Any Market, it doesn't work. If you're willing to do the homework, and it's never been easier to learn about the companies behind your stocks, individual stocks can change your life. They can make you rich in a way that no index fund ever could. And it happens. I have seen it endlessly with my own eyes. And hey, it's absolutely possible to beat the averages. Take the S&P 500, the benchmark of all benchmarks. There are 500 stocks in the S&P. Most of them are not all that good. In fact, at any given moment, I don't think there are 500 good stocks in the entire market. So when you buy an S&P 500 index fund like this SPY, the SPY, you're buying the good with the bad, which brings me to the unvarnished truth. You will most...
Mackenzie, what else are you watching? So that Mag 7 trade is splintered, and the divide really comes down to who's converting AI spend to actual margin. So what I'm watching, let's start with the laggards. Microsoft, Meta, Apple, and Amazon all underperforming the S&P this year. Amazon's in last place at 6%. Meta had its worst day in 3 years after raising its CapEx guide. CEO Mark Zuckerberg has poured tens of billions into AI talent, reorged the AI unit 4 times in 6 months this calendar year, and still no clear payoff. Without a cloud business, the return story is better ads. The winners, they look different. Alphabet owns the full stack, as you and Phil were just talking about a minute ago. Chips, cloud, distribution, and its AI model, Gemini. Those shares 66% higher with margins expanding. NVIDIA has roughly 90% of the AI chip market and gross margins in the mid-70s. Everyone else's CapEx is NVIDIA's revenue. And then Microsoft is in the middle, 40% Azure growth last quarter, the biggest spender among hyperscalers, but also the most exposed to the AI arms race. It's got $300 billion committed from OpenAI and a new deal with Anthropic. And the question is whether the backlog justifies the build-out. Now, the setup for 2026, if models keep converging, and they are, distribution matters more than who trained the best model. And that could reshuffle this board in Apple's favor.
Speculative stocks in existence, insanely high-risk stuff that often blows up in your face. Tonight, I'm coming out here to advocate something very different, good old-fashioned growth stock investing. Today, this is widely considered heretical, but for most of my lifetime, it was the most orthodox opinion on investing, and it did well. I'm just trying to teach you what generations of investors knew to be self-evident. Unfortunately, these days, the sophisticated operators love to tell you that people are too stupid to manage their own money. I find it insulting. But I've got to tell you, when you look at the history, it's not that hard, as long as you know how to stick to your guns. This is my thesis, by the way, in how to make money in any market. In every market, there are leaders. These are what I call hero players. We must strive to find, and man, sometimes they're incredibly obvious to find. Of course, I've had plenty of clunkers in my day, but with the power of observation, some curiosity, those are the 2 things you need. You can absolutely identify some of these phenomenal winners. And when you find a hero player, even if it's just one stock in your 5-stock portfolio, that's enough to produce some tremendous life-changing returns. And maybe
$20 billion to license Grok's technology and hire its top executives. That's nearly 3x its most recent valuation from just 3 months ago. Now, Grok, it makes chips purpose-built for inference, running AI models faster and cheaper than GPUs. Its founder, Jonathan Ross, helped create Google's TPU, which has become one of NVIDIA's most credible competitive threats. And now he is joining NVIDIA instead. Now, the chip startup wasn't looking to sell. NVIDIA approached them. The CEO, president, and senior leaders are all going over, though Grok Cloud will keep operating independently. It's another acqui-hire structured to avoid regulatory review, the same playbook NVIDIA used with Fabrica in September, and that Meta, Google, and Microsoft have used to scoop up AI talent. Now, Grok reportedly slashed its 2025 revenue projections by 75% earlier this year, so NVIDIA, it is paying a premium for a company struggling to hit its targets, but it has $60 billion in cash to deploy, and this deal locks up the minds who built both Grok's inference technology and Google's AI chip while keeping it away from Broadcom and AMD. Right. The deal is that NVIDIA just paid $20 billion for a company founded by one of the architects of Google's TPU, the chip that has become NVIDIA's most formidable rival. Grok's founder, Jonathan Ross, helped build Alphabet's in-house AI chip before starting his own company, and now he's joining NVIDIA, along with the kind of expertise that helped Google land major cloud deals with Anthropic and Meta. So NVIDIA, it is essentially hiring away talent that knows how to compete against them. NVIDIA's cash pile has ballooned to $60 billion, up from $13 billion 2 years ago, and it has been deploying it across the AI stack. $900 million for Fabrica's CEO and tech, $5 billion into Intel, $100 billion proposed for OpenAI, plus backing Crusoe, Cohere, and CoreWeave. Meta, Google, and Microsoft have all used similar structures. Call it a licensing agreement, hire the executives, avoid all the regulatory scrutiny that comes with a full acquisition. Grok's chips also solve a technical problem for NVIDIA. They keep data on the processor itself rather than relying on...
Saying maybe you short silver and go long gold. The chart master joining us now with what appears to be some gold on the wall behind him. What are you looking at, Carter?
So, yeah, over the weekend, obviously, and over the past several weeks, and then, of course, several months, the spike in silver is getting more and more extreme. And if you look at silver not only on its own, but in relation to gold, the extreme reading is one of the most excessive seen in the past 50 years since gold and futures trading began in 74. Let's look at a few charts and a few tables and try to figure out the way forward together. The first thing we know is that it is simply a ratio of these two highly correlated assets. And in April, 1 ounce of gold bought 107 ounces of silver. Now, as of today's low, 1 ounce of gold bought 55 ounces of silver and closed at 59. Interestingly, the long-term average going back to the 70s is about 60. And so we have returned to the average. But when you get this extreme oversold, and we'll look at it in the charts next, you play for a bounce in the gold silver ratio. So let's look at 3 charts. They're all identical. And this is, again, depicting not gold and silver, but gold's relative performance to silver. And of course, you see the plunge of late. In fact, again, having gone from 107 to as low as 55 today, and then this key reversal, which is very important. Next of 3 identical charts, you'll see where the ratio is in relation to its moving average. And on this iteration, you'll see that we are quite far below. And then the third and final chart, you'll see arrows, which annotate the 13 other times that we have been this oversold or this extreme in terms of where we are in relation to the 150-day moving average. And each and every time this has occurred since 74, past 50 years, silver has underperformed gold. And in fact, silver is down on an absolute basis 3, 6, 9, 12 months later, every single time except once. And so the bet here, at least that was the thought.
Hey guys, welcome back to my channel. I hope you all are doing well today. Alright, let's pick up where we left off. Because the market is still misunderstanding what phase of this AI cycle we are actually in. Right now, the most people are looking at the NVIDIA market cap and saying this has to be a late. But infrastructure cycle does not end because price look large. They end when the supply finally overwhelms the demand, and that is not even close to happening. In fact, demand is still accelerating faster than the supply can be built. Power grids are under the pressure. Data centers are booking capacity years in advance. Memory suppliers are sold out. Networking equipment in a back orders. AI factors are still in the planning stage. Those are early cycle conditions, not a late cycle condition. Why inference is about to overtake the training? Training get headlines, inference generates permanent demand. Every single chatbot conversation, agent workflow, robot decision, medical scan, the factory automation, or a smart city sensors query burn inference compute. Once models go live, inference becomes the recurring demand, daily and permanently. And here is the critical part. Over the model lifetime, inference consumes more compute than the training. This is the phase NVIDIA is now looking down. The Grok deal was not about headlines, it's about future revenue stability. NVIDIA is ensuring that inference remains inside its ecosystem. Why agentic AI change everything? Agentic AI is the first time AI stopped being a tool and become a worker. Instead of answering questions, AI will run payrolls, order inventory, monitor logistics, schedule production, and manage cloud infrastructures. Control robots, negotiate the contracts, run compliances orders, and the move AI from novelty to necessity. And the necessity creates non-operational compute demand. Once companies build this system, they can't turn them off. That means NVIDIA demand becomes structural, not cyclic. Physical AI, the largest opportunity on the board. This is the biggest blind spot in the market. Robotics, automation, stimulation, digital twins, smart factories, autonomous fleets. This is the where trillions will flow. NVIDIA already owns Omniverse simulations, CUDA software standard, AGX robots hardware, GPU stacks, training plus inference, networking, memory pipelines, interconnect designs. They are becoming the operational system of the machines. This that is not the priced into the stock yet. Why this is not a bubble? Dot-com companies were spending borrowed money on a certain uncertain use cases. AI companies today are spending real cash flows on the real demand from real paying customers. That changes everything. There is already revenue behind this build out, which means demand is not speculative, it's operational. Product roadmap confirmation. Blackwell Ultra ramping. Rubin 2026, Rubin CPX late 2026, Rubin Ultra in 2027, and Finiman in 2028. This roadmap confirm a multi-year demand visibility. Bubble does not have a multi-year order books. Final thoughts. This is the beginning of AI industrial age. The market is still pricing this as a tech cycle. It is not. It is an infrastructure transformation, and NVIDIA is sitting at the center of it. Stay patient, stay disciplined, and understand what actually you invested in. Now we will talk about the AI powered super cycles. The next NVIDIA. Everyone is watching NVIDIA. Almost nobody is watching what NVIDIA is about to break. And what is about to break is the global power grid. AI is a no longer software problem, it's now a physical problem. Data centers hitting the wall. A modern AI data centers consume more electricity than a small city. And the next generation AI factories will require 2x to 3x more power than today's. But here is the problem. The grid was never built for this. Power plants take 5 to 10 years to permit and build. Data centers are being ordered in a month. That mismatch is creating the largest power demand shock in the modern history. Why nuclear is coming back? Wind and solar cannot carry this load. AI need always on base load power. Stable, predictable, massive. This is a nuclear. Small modern reactors SMRs are now being fast tracked across the US, Europe, and the Asia. Big tech is already logging nuclear contracts. AI just restructured the nuclear industry. This is the next multi-trillion dollar cycle after the chips. The quiet gold rush, the power infrastructures. Everyone chases the GPU stocks, but the quiet winners are transformers, substations, switchgears, high voltage lines, grid control software, cooling system, back power systems, industrial gas supply, water infrastructures, fiber network. Every year data centers require all of it. This is the one in the century build out. Robotics is the next. Robots are leaving labs and entering in the factories. NVIDIA Omniverse plus AGX plus Isaac stack is becoming the operational system for industrial robots. Every robot requires sensors, motors, chip software, power, cooling, safety system. Factories will be rebuilt around the AI controlled machines. This is the industrial revolution again. The hidden truth. The market is still pricing AI like an AI boom. This is a civilization infrastructure rebuild. Power plant, factories, grid, cities, transportation, healthcare, defense, all are changing, and NVIDIA sit at the center. Final words: the GPU cycle is just the ignition. The power cycle, the robotic cycles, and the infrastructure cycle, those are the real multipliers. This is where the next generation of trillion dollars companies will be born.